Today on the Tearsheet Podcast.
So having spent several decades in payments and in cards in particular, I have seen multiple significant threats to how the issuing businesses operated, how different models like co-brands operated, even how acceptance marks operated. But I do believe that 3 or 4 party system, depending on how you think about it, is an incredibly powerful network.
Welcome to the Tearsheet Podcast. I'm Zack Miller. Today's guest is Jud Linville. Jud has decades of experience in financial services and payments, heading up Citi Cards and American Express's consumer services. He's now a senior advisor at investment firm General Atlantic. He joins us to discuss the threats and opportunities within financial services and how Fintech and Big Tech are competitively positioned to take market share. Jud Linville is my guest today on the Tearsheet Podcast.
Zack, glad to be here. So Jud Linville, Senior Advisor at General Atlantic. I've been there for about 3/4 of the year, so spend time with them on due diligence, on some prospecting, but frankly, most of my time with portfolio companies. Before that, I spent 20 years at American Express. I was President and CEO of Consumer Services, so I ran card business, traveler's check business, which we turned into a prepaid business, and also the consumer travel business. Moved to Citi and spent almost a decade there running their global payments platform and personal lending, as well as the last couple of years across the bank, all of digital and mobile, as well as data and analytics.
So a great view into sort of both fintech and traditional financial services as well, right?
Yep, seen a lot. So while I ran a bunch of those big platforms, I was always intrigued by what we could do to disrupt the current path. It was a pretty clunky, heavy tech stack that didn't really work in an agile fashion. So I spent probably every 4 to 6 weeks heading out to Citi Ventures or out to the West Coast or out to Asia, looking at other trends that I thought were going to be important and accretive ultimately to our customers, but in terms of how we went to market.
So let's start our conversation with the card business. I know you sit on the board at Marqeta, so get that front and center. I'm of the opinion that the card companies win. Like, there's no way they don't win. The networks. Like, can you talk about sort of their competitive dynamics and sort of what's happening in the card land?
Yeah, sure. So having spent several decades in payments and in cards in particular, I have seen multiple significant threats to how the issuing businesses operated, how different models like co-brands operated, even how acceptance marks operated. But I do believe that 3 or 4 party system, depending on how you think about it, is an incredibly powerful network. Because at one level, if you think about being able to bring buyers and suppliers together and removing friction in any commerce interaction, what the networks and issuers have done, along with merchant acquirers, but I put it largely with the issuers and the networks, the ability to present a piece of plastic, or these days, irrespective of form factor, so whether it be NFC RFID, whether it be an EMV chip, or whether a mag stripe, or the like, being able to tap and go to swipe or to insert, and being able to do that in a matter of milliseconds around the world in any country, irrespective of social custom or language or technology, is a pretty remarkable feat. So at one level, that birthright of that network that's been built with an immense amount of liquidity is incredibly valuable, and it works. I think the threats to it, which we go deeper into, are always going to be around, one, the cost of card acceptance. So that, for the last several decades, been always a hot topic. And the costs have lowered in terms of interchange in a bunch of different markets, sometimes because of regulatory reasons, sometimes competitive. The second piece is there are a bunch of clunky elements of how you transfer money. So if you think about some types of cross-border payments that aren't supported by cards, incredibly high cost and ripe for disruption. The third is, where a lot of the profit engine is generated is around kind of the episodic lending activity. And I think that there's been a number of players who have been very adept at building a really intuitive, simple point of sale lending capability. And so in some respects, that's also a natural threat to some of the cards. And then the last threat, while I saw all of the fintech players build some elegant design UX UI, oftentimes it was narrowcast services. The one place that I think is going to be interesting to watch is some of the big tech, particularly those that have a pervasive operating system and a reason to be there. And all you have to do is look to China and see how that kind of operating platform turned into payments. And again, it wasn't replacing anything. So it was built with de novo from Greenfield. But here, the ability to disrupt, whether it's a immersive ecosystem like Apple has, or whether Amazon, or whether even Google. And I think there's a reason all of them look to get into payments to, again, help kind of facilitate that flow, take friction out of it, and presumably remove cost and push more commerce through.
So before we get into, I guess, the threats, or the actual threats, or the companies and technologies that could be threatening, I'd love to hear from you, I guess, how the cards and the payment networks have responded to those. Like what I'm thinking of, like, Amazon, MasterCard and Visa, being very acquisitive over the past few years and owning different rails to different types of payments. Can we talk a little bit, I guess, how they've responded to the competitive threats before we move into the threats themselves?
Yeah, sure. So let's take it kind of two-step. So on the issuing side, that's where the direct connection to the consumer happens. So not on the networks, but on the issuing. If you think about it, the issuers, they bring liquidity, throughput to those networks, but they pay for cost of acquisition, they pay for the rewards, they underwrite the loans, and basically have to deploy capital. They're the ones who, in fact, if there are losses, have to have reserves on their balance sheet. So they run that massive P&L that is directly tied to consumer. And I think the thing that many payments companies missed was as the advent of a bunch of fintechs who built, as I described, kind of these very intuitive user interfaces. What a lot of the payments companies were left with is an old tech stack, oftentimes built on kind of third-party processors, sometimes proprietary, but one that was not very nimble, very agile, certainly couldn't plug and play the APIs that were being created. And so on that one, I personally, I can't say how many trips made out to fintechs to really study what they were doing. And frankly, in very clear and bold face, was to reverse engineer what they were doing in terms of how they built their technology stack. How, instead of thinking about this as a cost arbitrage model, how do you use this as an NPS plus and engagement model? And then how do you completely redesign how you build a set of microservices in agile development? And you can see the mashup of product engineers and marketers and data folks, so much different than the old days of 2 to 3 big tech releases a year. So I think one was a very healthy embrace of fintechs and understanding kind of what they could reverse engineer and build themselves, what they could maybe white label, or even what they could buy. And I think you're going to see more of that activity. On the network side, the networks really were not that acquisitive in the past, up until the last couple of years. And I think they've done a terrific job of looking to say, okay, how do we move much closer to real-time payments, and how do we then make acquisitions like the Vocalinks and a bunch of others that are going to bring us closer into real-time payments? How do they think about using the payment network to handle disbursements and a bunch of information back and forth, so that in fact you can move money to whether it's a gig economy worker or around the globe. And so that, to me, those are just very simple ways that they have looked to say, how do we either build some of our capabilities, and or more importantly, how do we begin to buy some of those capabilities and treat them as bolt-ons?
So, Jud, also data ag. We saw MasterCard buy Finicity last week, and Visa obviously acquired Plaid earlier in the year. Can you talk about, I guess, the rationale behind those types of acquisitions?
So I've talked to obviously the senior leaders of both places, who I know quite well, and without kind of divulging full hand, I think it's pretty obvious at 30,000 feet. Let's just take Plaid as an example. Visa has been a great enabler of big enterprise FIs as well as credit unions and small and regional banks, around the world. But the one thing that, if you think about, they were missing was the connectivity, I think, that they wanted to have to fintechs. And if you look at the data aggregation layer that's been built on Plaid, and it certainly was a massive improvement from the Yodleys and others that sat there and screen scraped in the world. And I think that a bunch of the kind of commerce disruptors and even kind of digital challenger banks realized like this is exactly the path to go. For Visa then to do a deal with Plaid brings them right into that universe as a kind of first party provider of immense important data. And if you think about it, the Visa, MasterCard, the networks, all they really are is a brand, a switch, and an immense amount of data aggregation. So I used to refer to it as it's basically a massive transaction processing machine that has an immense amount of information exhaust. And if that information exhaust, the auth data and the like can be captured and repurposed, everything from preventative things for fraud or for underwriting, or more importantly for incremental engagement with merchants. It's an incredibly powerful engine, and Plaid just accelerates that. And on the other side, I think Plaid was facing some very serious challenges from banks who were not wild about their model and how it operated within their environments. And many of them were beginning to push back, and one or two pushing back pretty publicly. Sitting under the umbrella of Visa, which can act a bit like Switzerland and basically act as the kind of the setter and good setter of regulations and governance across payments, I think that actually helps Plaid as well.
That makes a lot of sense. So let's switch gears a little bit into, I guess, the technology side of things. You mentioned Google before. Can you talk about, I guess, big tech's positioning and threat into the incumbent industry? How you see that playing out?
Yeah, well, I think it has to start with recognizing that each of them, whether it's Amazon, Apple, Google, Facebook, the reality is that they all have different business models and a different
and different assets,
different assets and a different sense of purpose in terms of what problem they're solving, and so that a couple of the players are big in terms of ad revenue. And so if you think about what payments could do to kind of close that last mile for attribution, to the extent that there could be more information that could be captured over time, could you have basically level 3 data beyond just the MCC of merchant category code. And so there's one path that looks and says, boy, could you really accelerate an advertising model with attribution? Another where if you think about marketplaces, it's just all about throughput and greater connectivity, more e-commerce volume with less transaction fees and threats to the model. In which case, Amazon, or you could even argue an Apple. And I think basically what you've seen without calling it out directly is that many of these players are actually beginning to test what network models might look like. And so it wasn't that long ago. I certainly and always enjoyed watching how people pay and on what basis. Standing at Whole Foods not that long ago when Apple Pay came out, and there was an Apple Pay sticker right on that physical point of sale. And I, said to a number of the senior folks there, including Eddie Q, I said, boy, that looks awful like an acceptance mark, which, as you can imagine, there was a pretty firm denial. And I said, well, if your mark is sitting there on a physical point of sale, and it's encouraging somebody to use a wallet, which happens to be your wallet, I think it's pretty close into being a network, even though you're still riding on the network rails.
Right.
Obviously, it was not long after that Whole Foods was owned by somebody who they didn't want to flash, and so obviously that Apple Pay logo came off the physical point of sale. But you could see it in e-commerce, how if you're shopping on a whole variety of sites, oftentimes high-end retailing sites, before you get to the checkout page, you'll be prompted for Apple Pay. You'll also be prompted for PayPal and others. And that's even before the checkout page, which Visa and MasterCard fight very hard to make sure that they have a prominent role in. So in some cases, it's actually jumping checkout and encouraging the wallet before making a choice about anything else. So I think you see some different ways in, and then the question is, are there different paths that some of the big tech might go direct to merchant in ways that they could settle. I think that's a much longer putt. I think it's a much more challenging one. It's got a whole lot of questions about will the merchants view these big tech players as a client, as a collaborator, or as a competitor. And I think that still is yet to play out.
Got it. I'd love to hear about some of the projects that you're working on. I know you sit on the board at Marqeta, and you have the role at General Atlantic. So can you talk about some of the, and I'm interested in hearing the projects and through that, a lens into sort of what's happening in the marketplace as well.
Yeah. So it's, so my work now, there's a little bit of carryover from some early stage stuff I was doing. I first unplugged from Citi and before I joined GA. So stuff and still kind of the Series A and B that for me is a heck of a lot of fun because I love working with mission-driven, purposeful founders who have just a big idea and are just trying to tackle it with every erg of energy I've got. So whether it's a company like a Centrelink on synthetic fraud in San Francisco, and again, not any formal role, but I've been connected with them for quite some time because I didn't want to take any formal assignments until I figured out what I was doing. Or something like an Amino, which is looking at the digital media supply chain. And as you know, if you look at a dollar that a brand puts in there and as it makes its way to an advertising agency and then a DSP and then SFB and then a publisher, that dollar gets whittled away to like 60 cents on the dollar. And so on each of those steps in that digital media supply chain, are there ways to follow the money? And in some cases, it's a perfect use case for distributed ledger in terms of treating each ad contract, each ad unit as a contract, and then following that payment all the way through. And so to me, some of the places where I do think distributed ledger can apply and make a ton of sense, like supply chains. And then there's companies like Marqeta, which I know Jason and his team for several years, and they frankly set the global standard when you think about a truly digitally native kind of card API platform. And that's the stuff I was always looking at some of the user interface work, but more often looking at the various platforms that either Citi could ingest or that we could find different ways to use pieces of those capabilities. And so that, the work with Marqeta team is just starting out, but I'm immensely intrigued when you think about how they can grow from whether it is the commerce disruptors, whether it is some of the tech giants that we talked about that they do work with, whether it is some of the kind of digital challenger neo banks that have popped up, like for example the Chimes of the world and others, or whether it's the top issuers that ultimately can then make their way into and displace a bunch of the old legacy kind of third-party processors that just don't have that modern tech stack the way that Jason and team have built for developers. And then within the GA portfolio, obviously it's there's probably 3 or 4 themes that I end up getting pulled into. I sit with both the technology vertical as well as the financial services or fintech vertical globally. And so that, one is around kind of big data, and not just big data for big data purposes, but to solve a variety of fraud or financial crimes. So think broadly, everything from AML to KYC to all the way down into fraud, whether it's first party, third party, synthetic, and the like. And so, companies that not a GA company, but one that spend time with Nuno at Feed's Eye and have an immense amount of respect for what they're doing. The other path is around a bunch of digital mobile tools. So, for example, a company called AppsFlyer, which you may know is really based and does a ton of stuff at that last mile in terms of mobile downloads and attributions, which to me, that is the marketing channel that is primary for just about anybody who's doing more sophisticated direct-to-consumer work. And then around broader authentication, whether it's companies that we are looking at that are in the space or companies we've invested in like Clear, the bioauthentication that's happening at airports, which is, we spend time working, thinking, are there ways that same capability, that same app, that same platform can be applied to sports stadiums and entertainment venues, same way, certainly when you think about in a COVID environment, can it apply to a health pass and everything from building entry to the like. And so those are the kind of things that, and then obviously it begins to change a model of how a business might operate, some direct to consumer, some B2B, and then how do you think about how to build that kind of sales and marketing force versus direct to consumer, and how do you think about pricing? So those are the things that float my boat. And after 30 years of playing around this space, it's very familiar territory, but it's fun to be directly working with some just incredibly talented entrepreneurs and founders.
Amazing, all the different things you have your finger on. In the remaining time, we have one last question. I'm curious what you think about the Galileo SoFi tie-up.
Yeah, I didn't see that one coming.
Mm-hmm. Yeah, I don't think many people did.
And obviously playing around in this space, spent a reasonable amount of time kind of understanding what Galileo had and didn't have, and obviously to the extent that at one level you could say it's a competitor to Marqeta.
Mm-hmm.
I don't have a whole lot to say there, other than the fact that I think the next question is going to be, so for a bunch of other people on the Galileo platform, does that change the way how they go to market, or how some of those clients look at Galileo? Like everything, that's going to be the next set of questions that people need.
You mean from a competitive standpoint, meaning that SoFi could be, if they're a lender, you're actually on a competitive platform?
Yep.
Yeah.
It's not new to a SoFi lockup with Galileo. That's always the kind of the next set of things that people are modeling and working through or negotiating. But I have an immense amount of respect for what Jason and Omri and the entire team have built at Marqeta. And if you look at their client list and kind of what they solve for, so whether it's door delivery with DoorDash and Instacart,
mm-hmm.
whether it's wallets and the like with Square, I could go on. I mean, they are powering the kind of modern use cases that
new economy.
Mm-hmm. Yeah, the new economy, exactly. In ways that are incredibly configurable and incredibly developer oriented, and they've got just a great customer obsession. It's a product led, the customer obsession, and founders who have just both an immense amount of principle in how they do things, but also a heck of a lot of grit, and that's what attracted me to Marqeta.
Jud, it's been great talking to you. Thanks for joining us on the Tearsheet Podcast today.
Zack, I enjoyed it. Thank you.